Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Hello, everyone, and welcome back to another episode of Business Innovators Radio. This is Matthew Lochran, your host, principal consultant at Midtown West Media. Today, we have a very special treat. We have a guest of Mr. Oscar Garcia. Oscar is the CEO and co-founder of Uulala, the fintech and mobile application, as well as financial services platform. Oscar has a background in the merchant service industry, finding organizations as well as driving growth, as well as consulting for major companies such as Ford and AT&T on product innovation and branding. Oscar, welcome to the show. How are you doing today?
Good, Matt. Thank you very much for having me.
Yeah, great, absolutely. Just a little bit about your background, Oscar. Can you share a little bit about your story and your background and what kind of inspired you to become an entrepreneur?
Well, it didn't start off as an entrepreneur. I was trying to become a diver for the U.S. Olympic team back in the early 90s, right out of high school. And that didn't go so well for me. I actually hit my head and lost my career, so to speak. But I guess I'm lucky, I didn't lose my life. But what ended up happening is I met a mentor, a business mentor, and I've been meeting people on and off. But this one really hit me strong. This mentor, when I met him, he was worth about $4 million. I ended up bringing him coffee for about 4 or 5 years, helping him out with his seminars and whatnot. But he ended up making $300 million in front of my eyes. And that's really what started me off, is finding the right mentor that had great results. And ever since then, I've wanted to help people. I wanted to be an entrepreneur. I wanted to have that lifestyle. I couldn't see myself working for anyone else outside of, working for myself and my own passions. So really, that's what started it off. And that was 1992, January 17th, 1992. I remember it like it was yesterday, but it was a great day.
Wow. Yeah, it's definitely an impactful day. That must have been something to really see that amount of wealth creation happen right in front of your eyes. And I guess, just being a sponge and, soaking that information up, I'm sure has definitely led you down your journey. Now, today we're going to talk about an organization that you called Uulala. Can you tell me a little bit about the business and, what are its products and services?
Well, Uulala was created to really answer the problem that the underbanked, have. And I was one of those underbanked. If you really look at it, when I started my career in business, I wasn't the greatest or the most financially fit individual there is out there. And in my culture, the Latin culture, we all start off that way. The problem is some of us have more problems than others. And it's just a perpetual cycle that goes downhill really, really, really quick, especially migrant workers. You can imagine them that don't have a social security number, don't have anything. Being poor is expensive. I've always heard that in the banking industry. So what we did is we actually created a company that is sole focus is to mitigate all the charges that someone who is in the cash world will encounter to lower them down to the lowest possible fees, if you will, that they can possibly encounter. At the same time, helping them build a credit line from their activities, not from where they were born or anything like that, but who that individual is and what he is currently doing today, right? Because we all remake ourselves constantly. So this program was made to really give people a head start, if you will, in building financial inclusion, for a lack of a better word.
That's quite interesting. So just so our listeners are fully aware, what does specifically under or unbanked mean that you're referring to in regard to this population?
Well, underbanked was kind of like what I went through. I went through a period of my life, and especially in business, we all go through this, where I couldn't get a bank account. I was cashing my checks at payday cash locations. And everything I did was walking into a facility, standing in line, paying an extra fee just to pay like my bills, my water bill, my electrical bill, and all that other good stuff. The unbanked are even worse. They have no IDs or possibly very little identification. They are making money. They want to be included into the digital age, but they don't. They can't even get an ATM card. They don't have those means. So, we're talking about 2 billion people in the world. And when you're looking at the migrant workers, especially in the past 2-3 decades in the United States, the Latinos have been the dominant migrant workers here in the United States. And they bring in, especially if you look at Latins in the United States, they bring in a total of $1.5 trillion into the economy. But most of it is cash. So how does someone save money is our whole goal, right? This demographic, if you will, that is cash-based buyer or underbanked, maybe they only have an ATM, but they don't have credit lines and they're still struggling. That is our target market to help them to become more financially included into this world.
So just based on those numbers, this sounds like a global problem, massive, situations that are happening right now where, again, with this cash economy, how do you even get into a business like this? Like, what led you to this field?
When you really look at every industry, it's driven by the lowest point of that business, the end consumer. And my co-founder and I, Gustavo Lopez, we ran into the same problems. We ran into it in merchant services. He ran into it in the music industry. And let's just take his example, for instance. Universal Music is the company that he helped run for 20 years. He was the pioneer of Latin music throughout the United States, throughout the world. They actually control about 70% of all Latin musicians. Now, whenever there's a music festival, in the general market, like a Coachella, a lot of people buy their tickets at Ticketmaster. That's the trend. But with the Latin culture, 70% was purchasing cash. And that's a problem because you don't know what else they're purchasing. You don't know. There's no database that tracks cash. So that was a major problem with Universal. So when Gus and I started talking and started sharing opinions and notes, we told him, yeah, we have the same problem in merchant services. We actually started a merchant service company where we were servicing these businesses that were catering to minorities, and they were telling us, hey, 60% of my business is cash. And that was odd to us because the rest of the world is going into the digital age, and this minority culture, this working class where the foundation of every business relies on their spend, they weren't. So there was a major problem there to be solved in both industries. And that's how my co-founder and I got together. We started collaborating and we started finding solutions for this demographic.
I can only imagine, if you're putting on a major music festival and 70% of your sales, are coming from cash. I'm assuming that's going to be a lot of day of sales, right? That's very hard to probably forecast your financials and forecast your ability to, to cover costs and pay for acts, et cetera. So I can imagine the scale of that problem.
Well, exactly. Not only that, but think about the sales of the sponsors. How do you tell a Corona, a Pepsi, a Coca-Cola that the next year's, based on this year's numbers, next year's numbers could be X, Y, Z, or they can upsell that customer. There's no way to do any of that. This demographic has almost no database. The data on this demographic, on the cash demographic, especially minorities, is so looked at a 30,000 foot scale. Let me give you an example, if you will. There's a company that deals with just advertising to Latinos, and the way they look at it is that if Home Depot does an ad spend in Los Angeles, and let's say that it's 20% Latino, they assume that only 20% of Home Depot sales are coming from Latinos, and that's too broad of a spectrum. When the reality, when they did their studies, it was over 65% of the revenue coming in those areas were from Latinos. And you cannot track that type of database unless you have something to track, which is a debit card purchase, a Visa card purchase. That's quantifiable. Cash is not. And that's what we're trying to bring to this culture so that we can actually lower their costs for buying what they're already buying.
You mentioned a few things so far in regards to financial inclusion, reduction in costs and so forth. Can you give maybe a brief overview on how the Uulala financial ecosystem or mobile app, how does it actually work?
Well, our main consumer is going to be that individual, like what I said a couple of years ago when I first started, not a couple of years ago, a couple of decades ago when I first started business. I used to be that guy that stood in line to cash out his check. And when you really look at it, all we're doing is we're taking, everything you do physically into a mobile platform. You're already standing in lines to cash a check. You get a 5% fee for cashing your check. Well, when you look at it, let's say you're making $1,000, 5% a month is $50. And that adds up. $50 times 12, you're spending almost $600 a year just to cash your check out. You can now do direct deposit directly on the app. We give you the means to do that. We give you the means to take a picture of your check and actually have it deposited right into your wallet. Now, do the same thing with bill pay. Then you stand in line at the grocery store just to pay your bills. And guess what? There's another 5 to 8% service charge to do that. Let's say you have an insurance, payment. You go to this insurance house and you stand in line to pay this insurance. And guess what? Because you're paying in cash, it's $20 more a month by paying in cash. If you had a debit card, which our app gives you a virtual debit card and a physical debit card with your name on it, so you can feel proud and feel like you're inclusive into this digital world. But now you're saving $20 a month on your insurance bill. So $20 times 12 is another $240 a year that could go to your house instead of someone else's pocket. And on, right? Pay your cell phone bills. You usually go to the store and stand in line. Everything you do, you're buying concert tickets. What are you doing? You're standing in line buying concert tickets. You can do that all digitally for a lower fee. And what we're doing here is that we're making users help other users. So eventually, if there's a user that's a power user that has a high balance, we can actually match people together and say, hey, this person needs to put $200 into their wallet. You're at Starbucks. He's 10 feet away from you. Help him out and make some extra money. By getting people to participate and help each other out, we'll be able to create an ecosystem that can actually drive growth, that can drive more sustainable activities that are financially worthy for banks, right? If they see that you're paying your bills and you're loading your wallet and you're doing the right activities, we can actually get you loans that you wouldn't get otherwise.
That's a very interesting point right there. So I definitely understand from what you've just said, everything about, the time consumption from
right.
Waiting in line for every single bill that you have to pay. Just thinking about that, like I'm thinking, man, like I have a luxury that I haven't had this issue where I can, go online and pay my bills through my mobile app on my phone, right? I've never had to, again, I'm lucky that I've never had that issue. But it sounds like there's a very large population that is having a lot of time taken up by this, as well as a lot of money being spent in additional fees just to pay their base needs to survive in regards for, shelter and food and, minimal bills and so forth. But then the last thing you just said was quite interesting. If your ecosystem has the ability to then track these bills being paid, and then you're issuing some type of like credit score that you said, can you maybe go a little bit into more detail about that process? Because that to me is quite interesting compared to everything you've saying so far.
Well, that's the whole goal on why we've done this, because there's other means to do a lot of the things that we just covered. But why are we doing them? If we're not doing them to increase the ability for the end user to have access to finances, then we're doing an injustice to this user. So what we did is we came up with our own credit building scoring ecosystem. This is based out of consumer activity, not a broad number, right? If a FICO score is XYZ, and then guess what? If you don't have a social security number, you can't have a FICO score. If you're in Mexico, FICO doesn't work. If you're in Peru, FICO doesn't work. Brazil, FICO doesn't work. So we decided to create a credit scoring system that's individualized. It's very personalized. It deals with social media. It deals with artificial intelligence. It deals with microcredit scoring engines. So that way we get to track that if you go pay a bill, that should count as a credit scoring mechanism. If you pay your rent, if you pay your car bill, that should be a credit worthy mechanism. Too many times in the legacy world of finances, if you will, they only score big events. They only score if someone pulls out a $10,000 loan or a $20,000 loan or a home loan. They don't score the micro events that actually tells us more about you. So, for instance, one of our programs that we have with the entertainment world is we're saying, trust these individuals. Give them $5, $10 of digital credit. Let them have this credit line and let them pay it back so they can access premium services for the entertainment world, whether it's video, music, ticketing, whatever it may be. Entertainment is the catalyst. People work hard. They want to escape. They want to go enjoy their life. So what if an entertainment company gave this individual a $10 digital loan to see who's credit worthy or not? So let's say 50% of the people pay back this credit loan, this $10. Well, guess what? In the legacy world, you usually give away a 30-day, 60-day trial of your premium product. So now if you do it as a credit line and they pay it back, two great things happen. One, you got to see that the customer wants your product. But two, we got to give them credit points. So that way financial institutions can loan them money because they know that they're credit worthy, that individual is doing the right activities to be part of the general world, to have responsibility, right? Where he's showing us that he is responsible.
Wow. Okay. So that kind of blows the roof off stuff that's going on right now, where what you're doing is you have this, microcredit algorithm, scenario that you're using inside of your mobile application, where it's giving these individuals that, again, who normally are either under or unbanked, the opportunity to actually start building their credit profile, right? To have those transactions mean something on a larger scale than just paying that bill, right? To kind of build that profile for them. So in case they do want to go purchase a house somewhere, or they do need to maybe take money out for a car loan or to pay for student loans or education or something like that as well. There's going to be something that can document and show what their past payment history has been. And now you said you're adding in a layer of entertainment to this for premium services. I mean, to me, again, taking it for granted, right? I haven't had that issue before, but that must, I think, probably be pretty disheartening. If I can think of a better word for it, that if I'm coming to an entertainment website, I mean, right off the top of my mind, thinks of things like like Pandora or Spotify or iTunes or something like that I just purchase stuff with, right? That if I wanted this premium service, that I wouldn't be able to pay for it. There's not so a lot of these individuals don't have that mechanism to pay for that. Is that kind of what you're referring to for what you just said, or can you elaborate a little bit?
No, exactly that. Not only that, but what if your funds are limited and there's no reason to pay for it? There's no reason to continue it. If you need to have a lunch, if you're deciding, well, listen, I'm going to cut down on my Starbucks, or I'm going to pay for my entertainment. Once you love your premium packages, right, of your Spotify, your iTunes, your Amazon, your Netflix, your Hulus, you're part of the general world. When someone says, hey, did you see that episode of Game of Thrones? Or, hey, did you catch that latest episode on Hulu about this show? You're part of the conversation now. Because the great part about this demographic is 70% of them have mobile phones, and almost the majority of them are in social media. So when people are saying, did you see that show? They want to be included in that conversation. But this gives them a mechanism to get a credit line from those providers, pay back that credit line, and actually earn the ability to get more financial loans, more microcredits in the beginning, $40, $50, $60, $100, and then real loans from larger banks that are watching this trend. And within 6 months, then we can go after a $500 loan, a $1,000 loan, a $2,000 loan, because they know that you are trustworthy. They know that you actually pay your bills. Whether it's $10 or $10,000, it shouldn't make a difference. It means that you have the right intention. So intention is valuable here. If you intend to steal something, you're going to steal it no matter what, right? You're going to steal Spotify, you're going to steal iTunes, no matter what, you're going to steal it. But if your intentions are to pay it back, your intentions is to do the right thing, then you should be rewarded. And that's what we're saying right now. You're not rewarded. There's no incentives. You want it. You can't have it because you don't have a mechanism to pay it. But now you can have a mechanism to pay it and have a reason, get a reward for doing the right activities. That's what we're saying.
That is, I think it's one word, probably empowering, I'd say, for the demographic that you're specifically targeting, with the service. The social aspect of what you just described, of being part of that conversation, feeling included with that. And that would really only kind of increase, I guess, the self-confidence of that individual, knowing that, they are included and they are being seen at the same standard, if you will, as other people within this program.
Well, and just go back to what you said. You and I and people who already have debit cards and bank accounts, we take it for granted that we can go shop at Amazon where we can save a lot of money, right? Amazon just purchased Whole Foods. And if you go through Amazon grocery store service, guess what? Avocados are cheaper. Bananas are cheaper. When I buy a product at Amazon, I am actually saving between 10% to 30% in some cases, because I have the ability, a digital payment ability, to buy those things. And we take it for granted day after day. In fact, I always tell people that your financial inclusion is like air. You don't think about it until you don't have it. Imagine, right now, you're not even thinking about air. You're not thinking about breathing, but you're just doing it because you can. What if you couldn't? How important would that air be? That's exactly how important financial inclusion, having a debit card, having a wallet that can give you the ability to lower your costs and actually put more money into your household, that's how important it is for this demographic. It's air.
Yeah, I mean, when you put it like that, right, it's really, you think about, you're sitting there treading water is what it seems like, right? And all of a sudden you kind of dip below the surface, and like your eyes widen, you're like, oh my gosh, what's going to happen now? So this is kind of that difference maker, where this is really kind of that lifeboat that, this specific demographic doesn't have. It sounds to me as well that there's going to be quite a bit of an educational piece required. If these are all new services for this demographic, right? And these are kind of a new ecosystem for this demographic. How is your organization going to be kind of approaching an education of financial services as well?
I think we're approaching it in a way of a shift, not necessarily a re-education or an education of a new thing, right? If you really look at the adoption levels of, for instance, the smartphone, it took us a while to go smartphone, GPS, MP3 player, on and on and on, all in one device. That took a while. The adoption level that we're talking about here is actually a shift saying, don't stand in line, use your smartphone. Don't stand in line to pay your bills, use your smartphone. Don't go to the grocery store to buy a concert ticket, use your smartphone. Instead of being in line 10 times, what if you only went once to load your wallet? And once you did it once, now it's all electronic. It's just, your employer now does direct deposits. Financial loans are now done directly into the wallet. You can move that wallet globally, right? Once you do it once, you will avoid all that other time. So if we attack this process as a shift instead of an education where we're showing people that they're already doing these activities, now let's lessen the time that they're doing it and lessen the cost of them doing it, like remittance. Let's lower all those fees. I think the shift will play itself out. And we have partners right now, physical partners and professionals that deal with the minority culture, where they're already going to these insurance houses. They're going to be able to get educated on how this product can help them when it comes to paying their insurance or their bill pay or their groceries. So we're establishing partnerships. Right now we have close to 50,000 locations and growing, where people are going to be able to walk in and do some of these activities so they can get accustomed to shifting how they do something, not really educating them to do something brand new. We're just shifting them to do something a little bit different.
Gotcha. Okay. So what it really sounds like then is you're taking a device that, as you said, 70% of the population is used to using in regard to their smartphone and their internet enabled, and just really saving them instead of sending in 10 different lines at the grocery stores or the insurance places, kind of giving them the opportunity to load, as you said, the wallet with funds and actually perform tasks that they normally do. So this kind of, I guess, what I'd kind of equate some of this to would be like Safaricom in Africa, in Kenya, when they developed the M-Pesa, which is their currency. They simply took the cell phone system that they already had and basically overlaid the ability to do money transfer via text message and created an entirely new economy by doing so.
Right.
I think last I heard, it's they process almost 60% of Kenya's GDP through M-Pesa. So it's similar in concept, where you're reaching out into a demographic that's very used to using their device for certain things, but not others. And it's really just shifting them to understand that you can save a lot of time, and it sounds like a lot of money, in the process of leveraging the technology you have in the palm of your hand to do more for you.
Correct. And decentralizing everything, right? Instead of having just a few people who control payday loans and remittance and what have you, have everyone control it. Everyone can participate in helping someone load a wallet, or helping someone send remittance, or helping someone do what have you, for a lot lower fees. So M-Pesa was a great example, because that was one of the business models we took a look at. But then we said, how do you do it globally? How do you do it cross borders? How do you do it where you're combining, these services for Canadians, Americans, Mexicans, Peruvians, Costa Ricans, Brazilians, right? On and on and on, every Latin culture, every minority. And we're focused on this culture because we know it. Our co-founder knows it. We know it. Our partners know it. There's companies that need this service to pay out their employees. But why just pay out their employees and load money into a bank account? Why not load money into a system, an ecosystem that will give them micro loans and give them the ability to get other financial, devices, if you will, that can help them out? Because sometimes, some way, someone's going to get in trouble. And if you have a good history with us, then you can borrow some money so you can get out of that situation you're in. So yes, M-Pesa was a great example. And I think we're looking at other ecosystems, but more than anything, what we're trying to do is to make sure, and what we will do is make sure that people can help people. That if there's a business out there that's already servicing this demographic, that we give them something of value, not just another, trick or something, but something of value that can benefit their lives, where if they use it on a daily basis, their lives will bring, great financial rewards, because now they're included into this global economy.
That's a great kind of, I think, overview and description for what you're saying. And I think you hit the nail on the head. Where my next question was going into was, empowering people to people, right? So you're working with business owners, giving them the opportunity, to provide more additional services, through whether that's with some type of partnership with Uulala, in some way, again, to help them service their own customers better, right? And probably drive their customers come back to their locations more and more. And in the process, they might purchase other things as well. No, excellent answer to the question. Thank you very much. I'm kind of going to shift a tiny bit here in the conversation and kind of dive into a little bit about the startup environment. So based on in your history, I understand you come from you're driving startups and so forth, and I understand being a founder, you probably have to wear about 15 different hats at all times. So one thing that our listeners really kind of dive into with their small, medium-sized business owners or startup founders, how do you kind of prioritize, your opportunities in your day, and what kind of habits do you put in place to make sure that you're maximizing your efficiency?
Wow, that's a really interesting question. It's controlled chaos is what it is when you're a startup. If you're looking at building a business, let's really talk to those individuals, right? If you're really looking to building a business, you have to sell yourself hourly, by minute, to not just the people that you're trying to convince that you're going to do something great, but to the people who are already involved with you. I always say that momentum breeds momentum. So, for instance, there's going to be days where you have people where your technology grows, but nobody wants to listen to you in distribution. So you use the technology momentum to make sure that your distribution team is actually getting built. So the way I prioritize is I look at my core activities, and the core activity is always build your product, right? Build your distribution, pre-sell your distribution team. So that way, once you're done building your product, you already have customers. That's very important. If you pre-sell, then people are waiting for you. But that's why building your product is really important. And then third, dealing with your suppliers, right? You're constantly closing partnerships. To do what we're doing, we need a dozen different type of partnerships, from banks to money service businesses, remittance license, POS systems, KYC compliancy, laws, regulations, on and on and on. So my priority was always on these three things, right? Your providers, your technology, and your distribution. That was the first three things. So if I do that every day, I know I can do the rest of the stuff. I know I have to make time for legal. I have to make time for whatever. But if I can get momentum on these three things, then more people will be willing to participate. And that's when you bring in quality individuals. We have a business dev team. We have our COO, for compliancy and what have you, our operations. So he's in charge of building all these partnerships that we have. We have a distribution team that really looks at marketing material, So when it comes to these things, what I do is I like talking to all my main people at the very least every other day, but I try to do it daily. Because if I can tell them about something great that's happened from one department, then that's going to motivate them to try to get something great to happen in their department. That's how it starts. And then from that chaos comes a system and a process. From that chaos comes this individual is going to be in charge of this individual is going to be in charge of this. And what I like doing is I like letting people, take ownership of those positions. It's theirs until they lose it or until we find someone better than them. But it's up to people to really participate with you. And you can't focus on the people that drop out. You have to keep on replacing people as much as possible. But if your vision is not there daily, if your vision is not there hourly, people are going to drop out and not believe what you're doing as a startup, as an entrepreneur, in a moment's notice. If you waver, if you change your mind, if you're not dogmatic at what you want, people will not follow you. But if you're stubborn like an ox and keep on repeating that story with passion and drive and motive, you will attract these key individuals that will run your department. That chaos turns into a controlled chaos that turns into systems and processes that actually turns into a real business. We did this 3 years ago. We ended up doing $60 million in revenue in 9 months because we were able to develop the right team members, and now we're going to be doing it again here at Uulala.
I think it was a very great point, especially at the end. From what you're saying is, there has to be that feeling that, we're all in this together, right? You need the buy-in from every one of these key individuals that you're speaking about to understand that, your passion is their passion. Their passion is your passion. If someone's having a downtrodden day within their department, well, let's focus on the positive to help kind of boost them up, et cetera. So I think that's a very key point, especially when you are at a startup phase, when you're in a stage of a business. Celebrate those daily wins, if you will, to kind of help continue that momentum. Absolutely. Now, there's one thing I wanted to touch base on as well, because this is a large kind of financial services undertaking that you're talking about right here, global product base. I'd love to kind of get your feedback on blockchain. Reason I'm saying that is, I think Goldman Sachs just put out a video just recently as well about, 19 different industries that, blockchain can be, applied to. And I think they left number 19 blank as your industry. It seems like it's going to be kind of the next thing on how, especially in the financial services world, how transaction happen, contracts happen. So have you guys looked into blockchain at all?
Well, we're using, a process of blockchain in our ecosystem. The decentralized concept of blockchain is the future, because again, instead of having a handful of people control an industry, like if you look at the banking industry, that's what it's all about, right? A handful of people with a lot of money that can control an industry, and when they do something wrong, and I'm not going to mention the names of banks that do something wrong, but they have horses on their logos, but they do something wrong, they get away with it. And they do it wrong to their own customers, which is freaking frustrating to me. I'm like, how the hell do you do that to your biggest financial contributors? And it's because people with less money get taken advantage of, over and over and over again. So put it into the blockchain. What if the competition was fierce? Kind of like what happened in the mobile phone industry, right? It went from contracts to no contracts to unlimited minutes to on and on and on. Now you can switch back and forth and it doesn't even matter. But the evolution of that business model happened because of the consumer. Blockchain gives that consumer power, or gives any industry power, where you're saying, hey, let the market decide. What if we, for instance, blockchain technology and having a ledger that tracks all activities is what we're after. So every one of our power users or merchant partners is going to be a node for us, a blockchain node, if you will. And that way, ledgers are recorded on their device, on their computer, on our device, on our computer. So if something happens, there's constant redundancy. And that gives us the ability to actually track the good behaviors of our people. Now, what happens when you do that? When you do that, other people can actually see that, hey, listen, this community maybe has a lot of people doing remittance and someone wants to help them out for a lower fee. They're going to be able to see that and actually reduce fees for these individuals. And maybe, their compensation is going to be some other incentive. They're coming into their store more, they're buying more goods, that type of incentive. It's kind of like the gas, station idea, right? If you have a good price of gas, they're going to enter your liquor store and buy a lot of sodas and whatnot. It's the same thing. So blockchain and the open ledger concept gives us the ability to have our power users, our users, more in control, where there's not going to be just a set of people making all the money and controlling all the rules. We let the market decide. So I believe in that concept, and I think cryptocurrency is any type of electronic means of currency. M-Pass, for instance, that we were talking about in Africa, they're using cell minutes as currency. So you can do that. If we don't look into those technologies, we might miss out. And in fact, the way this whole blockchain industry is being looked at is Internet 3.0, right? The Internet in 1994 to 2003 just blew up. People thought the Internet was going to fail. People thought it was just a trend. It was something that will fade away. It didn't. From 94 to 2003, the adoption level of the Internet was massive. Blockchain has hit that adoption rate already. It's actually outperformed the internet adoption rate. So it'd be silly for us not to look at nodes, not to look at open ledgers, not to look at blockchain technology to actually decentralize all these financial activities. So yeah, I truly am for it.
It sounds like that there's been quite a deep dive into this, so I appreciate the answer. A couple things. One is I always kind of like to wrap interviews with an interesting question. And you being in the tech sector, I'm always curious when I talk with fintech or tech founders, et cetera. Kind of what is that one gadget or gadgets that you're addicted to and you can't live without?
Damn, good question. It would have to be the device I'm in right now, the cell phone. This is our freeway, and we can get to places. We can't get to places without that freeway as fast as we do. Cell phones, smartphones, Wi-Fi, the things that power the underlying life is what I can't live without. I mean, imagine me having no Wi-Fi here. I live on top of a mountain, overlooking the city. If I didn't have Wi-Fi, forget about it. I couldn't communicate with anyone. So I believe those two components, smartphones and internet access at high speeds, is going to change the world. And that's the same thing with blockchain. Without the smartphone, without the Wi-Fi, high-speed Wi-Fi, I think a lot of us would dread life. I mean, I don't know about you, but I remember when someone used to page me and it beeped, and I had to run to a phone and call them back just to see what the beep was all about.
You had the beeper, and you had special codes, right?
Right. And I wasn't too high tech, so I didn't have the beeper that gave you the message, right? I had the beeper that just beeped that said call the number. So really the driving force behind what I can't live without is going to be the smartphone. I would have to stick to that answer, smartphone.
Yeah. And then just so our listeners, if they wanted to get more information about Uulala and your mobile application, do you guys have a specific website up, or how would they go about doing that?
Yes, what we're doing for the user is not just building a site where it educates you on our product. We're actually building a report of things you should be doing to actually build up your credit worthiness and actually build up your profile as a good individual so people can start loaning you money and give you more opportunities. We're going to come out with this report. You'll find it at uulala.io. That's uulala.io. You'll find that report there. Obviously, our product is launching here in the next couple of months. So between now and then, there's going to be a link where if you give us your email address, your Facebook address, we'll send you the report so that way we can help you get more inclusion. And then those individuals will have the first access of the Uulala platform so they can actually start doing these activities themselves and start building their financial inclusion credit line.
Cool. So it sounds like you guys are almost given like a report and some beta access is what it sounds like. Is that correct?
Correct. So that way they can see how powerful they really are. I think that's one of the key things with all of our partners and all of our executives is that people have been told that they're not worth anything because they only make $500 a week or something like that. And they're wrong. You are more powerful than what people say. They only tell you those things and they only feed you to death to control you. Our goal is to give you a report to show you how much control you really have. And if you utilize this control, you can actually drive your own change, be your own heroes, and actually have people come to you with financial offers and things like that. So that's what our goal is with the report and the program, is to really empower the user.
Perfect. Oscar, I wanted to thank you for your time today and for you coming on the show. It sounds like you guys are quite busy over there in the Uulala Control Center, managing controlled chaos is what it sounds like, and making sure that systems and processes are getting put in place to affect a great deal of individuals. So again, appreciate your time coming on Business Innovators Radio. And I just want to say thank you. And I'll make sure that we get this off and running and our listeners can jump over to Uulala.io to go ahead and get on that beta list and get that report.
Thank you, man.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.